Well, a slew of travel earnings this week from Airbnb, Expedia, and Marriott, all pointing to a slowdown or moderation in consumer demand. But our next guest says there's still opportunity for investors in the sector. For where to play in the travel space, let's bring in Ron Josey, Citi Research Internet Analyst. Great to have you on today. Give me your sort of snapshot based on what we've heard from the companies before. Tough to make the comparison to the revenge travel that we saw last year, but maybe not as bad as some people expected.
Yeah, no, Kiko, I think you're right. It's sort of a challenging time now because we're coming off of 4Q where, from what we heard, October was a challenge given the conflict in the Middle East. But then you heard Airbnb talk about accelerating growth in November and December. You heard Expedia say that Vrbo continues to be somewhat challenged as they migrate to the new platform. Yet, by and large, it seems as if consumer travel trends remain healthy. Unemployment is better or is where it is. And, the big question we get constantly is, we heard about the summer travel in 22. Would that repeat in 23? The answer was yes. The question is, does that repeat in 24? And frankly, I don't see any signs that would suggest otherwise. And so it seems to me the market is healthy. We do have some challenging comps overall. Everyone has already taken the trip. But when you have unemployment where it is and when you have sort of consumer confidence as high as it is, I actually think travel will be just fine this year. And 4Q was a little messy because of the October, the conflict in the Middle East. And 1Q gets a little bit messy because Easter is earlier on the year. But by and large, it seems like travel trends are holding up relatively well.
Yeah, so let's talk about some strategy here. I mean, Booking Holdings, your top pick, still waiting for those results to come through. But is it about scale when you think about where to put your money in what is expected to be continued momentum in the travel space? Booking is one of those that's got sort of a presence across the stack.
Yeah, no, I mean, within the online travel subvertical, if you will, Booking is our top pick, followed by Airbnb. Bigger picture, we love Meta, we love Amazon, we love Uber as well, so we can talk about those. But no, it is a matter of scale. There's no ifs, ands, or buts about it. And the more hotels you have in what is increasingly a supply-driven market, the more you can generate greater demand. And so Booking, having as many hotels as they do in Europe, increasingly in North America, and also in Asia-Pac, we just think they're amongst the best positioned to benefit from this continued trend of travel. And again, might be a little messy here with where Easter lies in 1Q and given the issues in 4Q. But I think come summertime, I still think Booking is amongst the best position. And the thing that Booking has, not just the scale in hotels, to your question, it's also the know-how and marketing efficiency on how to really go after those consumers that are willing and able to and want to spend on travel. And that's a superpower that I think Booking has that everybody wants to emulate. And what's different with Airbnb is, they talk about 90% of traffic comes direct to their site. And so they don't need to advertise as much for performance, i.e. getting that last booker. Rather, they're building up their brand, and they do a very good job of that. And the last thing I would just say on Airbnb is one of the key takeaways that we heard about from Airbnb this last quarter was they now have 7.7 million listings on their site, growing 18%. As that supply grows and you see travel becoming more intra-region, if you will, I think that's a positive for Airbnb as we go through this.
Yeah, I mean, that number, when you think about it, 7 million active listings, a massive one when you think about the presence they have globally. I wonder, when you look at a name like Airbnb, though, yes, there's a travel element in sort of the demand that you talked about. The overall picture is still strong. How much of that additional tailwind does a name like Airbnb get when you think about why people choose to list on the platform? It feels like there is a bit of a bump coming through from those who may not have listed before, or who in this environment are saying, maybe I need a little extra income. Maybe I'll consider hosting now.
I think that's really interesting. And so that 7.7 million number, that's up 18%. I think what you're finding is, and you saw this with Airbnb, Airbnb launches products two main product releases every year, one in the spring in May, one in the fall, winter in November. And these past couple of product releases have been really focused on making it easier to list your home. And it's not just listing maybe your second home, could be your primary home. There's also newer tools around things like co-hosting, which you might not want to list your home, but you know what? The person down the street does a really good job. You can actually have that person help you list and maybe manage it for you. And so I think just getting greater supply just helps to drive, just it brings more traffic to your site and just brings more alternatives. And so then the option becomes, okay, how do you improve that conversion? You have the traffic, you have the supply, and this is where Airbnb, I think, is really excelling with newer tools like guest favorites that's driving the conversion. So internet starts and stops. It could go on product innovation and products, and we're seeing that on Airbnb, and in order minimizing the friction of getting more supply on the site, but then also making it easier for us to search. And I think that's going to get better as the year progresses and as they launch new Gen AI tools that sort of changes how we search for travel.
Final question, Ron, because you did mention
Yeah.
Meta and just sort of the broad tech stocks that you're watching right now. This thing that you said about travel was sort of the scale, sort of the haves, the big players versus the smaller players. Does that also apply to the tech space? When you think about somebody like Meta, when they reported that massive bump that we saw in revenue, but also contrasted with the kind of declines we saw in Snap, it feels like that also points to sort of bigger is better in this environment.
Now, scale. We've always talked about scale begetting scale. There's no doubt that absolutely that trend continues. But when it comes to this environment where, we're believers that the online advertising market is strengthening. It stabilized about a year ago. It improved 6 months ago, and now we're strengthening. I think that strength is coming. It's not a rising tide. I think that strength is going to those platforms that have the scale and the capability and ability to drive greater return on ad spend for advertisers. And so that's Meta. Increasingly, that's Amazon. Of course, that's Google as well. But Meta is just doing so well. And I think the reason being is when you have that $3 billion, 3 billion users, on a monthly basis, you can just target and personalize and just really find who you're looking for. Now, the next step is, what after Meta, where do you go? And this is where we're actually very interested and pretty bullish on what Pinterest is doing. They're doing a better job of launching newer products. And so anyway, my point being is, yes, scale begets scale in this market where things are not normal. We're improving and advertising strengthening. I think Meta is, call it your best pick for advertisers, and that return on ad spend continues to improve. So it is scale. I agree.
Yeah, it certainly proved to be a big tailwind for the stock as well. Ron Josey, as always, Citi Research Internet Analyst. It's great to talk to you today. I appreciate the perspective.
Thanks for having me. Talk to you soon.